Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Thursday, September 20th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at @DanRusso_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free if you head over to www.chaikinanalytics.com/PowerFeed TV. So U.S. equities were mixed in Wednesday's trading. Financials and materials led, while defensives and healthcare were the worst performers. Treasuries were weaker across the curve, with the 10-year yield touching its highest level since May. The dollar was little changed on the major crosses. Gold finished up 40 basis points, and WTI crude settled up 1.7% on inventory data out of the U.S. Outperformers, as we said, financials, materials, and energy. Underperformers were your defensives and your yield plays, utilities, telecom, REITs, and consumer staples. And as we kind of get to the desk this morning, futures are slightly higher in the U.S. after that mixed session yesterday. Asian markets were mixed overnight, and European markets are seeing good gains here this morning. Treasuries are unchanged to slightly firmer at the long end, 10-year yield at about 3.07%. Dollar lagging on most of the major crosses, in particular against sterling. Gold is off 10 basis points, and crude oil is adding 30 basis points. And as we take a look at the chart here of the S&P 500, still testing resistance, kind of carving out this resistance zone, if you will. Support does come into play at 2873, 2800. The rising 200-day moving average is now at 2747. The resistance zone remains in place, 2900 to 2920. RSI remains in bullish ranges, and Chaikin money flow remains bullish. So a lot of moving parts under the surface, right? Sector rotation is at play to some degree. NASDAQ had a weak day yesterday. Small caps continue to be under pressure, especially on a relative basis. Tech was kind of middling yesterday, although in fairness, the NASDAQ did rally back to close well off the lows of the day. So we'll keep an eye on sector rotation as we always do. But from a strategic standpoint, we want to be long U.S. equities. We want to be long large over small. We want to be long growth over value. That hasn't changed. Obviously, we are always keeping an eye open for potential inflection points. We don't carry a dogmatic view in our approach to the markets here. So your market in a minute every day. PowerFeed subscribers will give you the 5 bullets that I'm talking about on the day in my work for Chaikin Analytics subscribers. Large caps continue to lead as the S&P 500 nears those highs. Banks outperform as yields hold above 3%. We'll take a look at the bank ETF today. Rising rates did drag on utilities, and they were hit hard. The group is down over 2% on the day. Pharma stocks are oversold. You've heard me talk for a while about healthcare as emerging leadership, and in the early stages of that emergence of leadership, it was the services and the equipment names within healthcare. However, now pharma seems to be really coming on strong, and I think that they're oversold. You've heard me mention that before. We'll do a little bit of a deeper dive on it here today. Futures do point to that slightly higher open. Power bars for the Dow really improved. We're now 12-1 bulls to bears for the Dow Jones Industrial Average. And you can really see it's been those large cap names that have been pulling us higher. Dow up 57 basis points yesterday, on the verge of taking out their January highs. S&P 500 saw some improvement in its power bar ratio, 125 to 54. There's that NASDAQ, closed down 8 basis points, but it was lower throughout the day. Slight deterioration in their power bar. Small caps just continue to underperform. We have been hitting the table hard. We were hitting the table hard when small caps were outperforming. We shifted. When we saw that pivot, we did not remain dogmatic in our view, and now we're hitting the table hard. We do not want to be long small relative to large, relative being the key word there. Bonds down tick, yields on the 10-year at 3.07 this morning, and there's your strength in financials as rates went higher. And look at the power bar ratio for the financials, 22 to 5. According to the Chaikin power bar, large cap stocks and small cap stocks are bullish. Major indexes are mixed. Turning now to our stock of the day. Every day, as a PowerFeed subscriber, we will auto-generate an interesting idea for you. It's based off of our proprietary Chaikin Power Gauge rating. And today's stock of the day is Genesco Inc. Comes to us from the non-food retail wholesale group. Really, these guys sell I mean, it's streetwear for the lack of a better term. Hats and sneakers. They own stores like Lids and Journeys. If you've ever seen them in their mall in the malls, stock closed at 47.40 yesterday, down 52 basis points. Has a very bullish power gauge rating, ticker symbol GCO, and that very bullish power gauge rating is due to very attractive financial metrics and very strong price volume activity. You can see here the key drivers of the rating, but when we look at the factors within these four groups and roll them all up into a rating, we come out with a very bullish rating. So what do we have? We have a very bullish rating, strong trend, strong industry, ribbon at the bottom of the screen. You know the drill, tells us where we've been and where we are in terms of that power gauge rating. And what we can see here is that the market and the model are in agreement. The dynamic duo is in gear, and the stock is oversold with bullish money flow. Most recent quarterly report, they did beat. Stock really didn't do much. Had a volatile day that day, but we're kind of right back to where we were before the earnings announcement. Stock is above a rising long-term trend line. I would say you do have support here at the $45 level. So when we take a weight of the evidence approach and look at what we have, very bullish stock, strong trend, strong industry, outperforming the market, oversold with bullish money flow, just above support, I think you got to be long Genesco. Ticker symbol GCO on the long side if you are following the process. Our sector tracker movement over the last 5 days, and you can see the fins have really come on strong as rates have ticked up through 3%. We talked about that yesterday. We'll dive in on the banks a little bit later in the show. Industrials have been strong for the past few days. Materials seeing a little bit of a counter trend rally as well. Energy strong with oil moving higher. Healthcare's actually moved now with the hit in utilities yesterday. Utilities are no longer the leading sector based on the power bars within Chaikin Analytics. Healthcare, the group that we've been talking about as emerging leadership, has now taken over that top spot. That new communications ETF is middle of the road, and you can really see how the yield plays have come off here as rates have gone higher. Utilities, real estate, and staples are the worst three performing sectors over the past 5 days. Let's keep an eye on that, right? We've been talking about how real estate and utilities were trying to carve out a relative bottom. However, while not remaining dogmatic in our view, we're going to be watching closely now to see if these groups now turn lower relative to the S&P 500 as rates move higher. Our industry in focus today is bank services. Over the past 6 months, the bank services subsector has underperformed the S&P 500 by 10%. And its power bar ratio, which measures future potential, is weak with more bearish than bullish stocks. It's currently ranked number 15 of the 21 subsectors that we look at, but it has moved up one slot over the past week. You can see the bearishness, right? 12 bearish or very bearish stocks for 8 bullish or very bullish stocks. And some of the indicative names there are Bank of Hawaii, First Republic Bank, and Lending Tree. And I'm going to say here now, I looked at all of these that have very bearish ratings. They're all oversold. And they don't really set up well for a trade right now, as far as I'm concerned, especially if rates are inflecting higher. We'll be monitoring this group closely as that shift has taken place. But I wanted to use one of these names as an example today of why it's important to understand the stocks that you're looking at. Because while we can make the argument that rising rates is bullish for the banks in general, one of these names on the list here is actually not a bank, and that stock is Lending Tree. The ticker symbol is TREE. You can see the stock has been in a steady downtrend and been underperforming the market for a while. The power gauge rating is very bearish currently, and it hasn't been bullish at any point in the past 12 months. Stock is currently oversold. Money flow tried to turn bullish, but the stock didn't rally, and now we're bearish again. We're below the falling long-term trend line. Positive earnings last time out did not serve as a catalyst to reverse the trend. And here's why I say it's important to understand the stocks that you're looking at. In Lending Tree is not a bank. So if you want to make the argument that rising rates is going to help banks, and you see, oh, Lending Tree is part of the bank services group, remember, it's bank services. So it's banks and also companies that sell into banks or a part of the banking ecosystem. And that's what LendingTree is. At the end of the day, you've seen their commercials, right? LendingTree is a lead generation company that connects people who are looking for loans, mortgages, home equity lines of credit, home equity loans, with banks and lenders who are willing to lend to those people. Now, what I would argue is that when rates were declining, we had a major refinancing boom. That helped LendingTree. If you look at a longer-term chart of LendingTree, you can see it had a spectacular run up until the beginning of this year. That was largely driven by a refinancing boom in the United States as rates were near rock bottom levels. Now, as rates are rising, we're less likely to see that tailwind of refinance now becomes a headwind. On top of that, a lot of the data that we're seeing out of the housing industry has been negative in terms of, home sales and the like. You've heard me talk about home builders in the past and their home builder ecosystem and not being bulled up there. LendingTree is part of the bank ecosystem, but it is not a bank. And I actually would argue that rising rates are a headwind to LendingTree. Stock is currently oversold. I don't like putting it out on the short side here. However, I do like monitoring it. If it does lift its head and become overbought, it becomes a compelling opportunity. Keep LendingTree on a bearish watch list. Your trending names. Yesterday's S&P 500 movers and shakers. Borg Warner had their investor day, BWA. Investors like what they heard. Their stock up 5%. NFX, not a ton of news. PX close to antitrust okay on their Lynn deal. And E-Trade, ETFC, caught an upgrade, and there's Citigroup up 3%. That is a bank. On the downside of the coin, Copart's earnings disappointed the street, stock down over 13%. And the rest of them are refiners. And while I was digging around to try to find some news to find out why this entire group was weak yesterday, I really couldn't find anything company specific. We did get oil inventory data. Perhaps investors didn't like what they saw there in the numbers. They did take down the refiners, Holly Frontier, Valero, Marathon, and Endeavor. Earnings update. Herman Miller beats by 4 cents. Red Hat reported after the close last night, beat by 4 cents. Stock trading lower this morning, and there's that Copart. They missed by 5 cents, and the stock was taken to the woodshed. Red Hat, really interesting because Oracle has had a similar phenomenon. They traded off after earnings as well. We want to monitor software closely now to see if these high-profile sell-offs in Oracle and Red Hat change sentiment on the group. We looked at software yesterday. It's in a steady uptrend. I don't see a change of sentiment just yet, but obviously we want to keep an open mind. Before the open today, we heard from Thor. That stock is trading lower. Also heard from Darden. That stock is trading higher. But all eyes are going to be on Micron tonight after the close. It is a neutrally rated stock here at Chaikin Analytics, but we want to monitor Micron after the close tonight. Now, I said banks outperformed as yields rise, and you can see this nice pop that the banks have. But I put this but there because we're still below the 200-day moving average, and we're still below this downtrend line. Until we take that out, it's hard to really get excited about banks. Here's the power gauge ratio for KBE, the bank ETF that we are looking at. It's skewed in favor of the bears, 12-8. And on a relative basis, KBE relative to the SPY, still in a downtrend, and KBA's money flow has been predominantly bearish since July. So while we're watching the situation, as trend followers, the trend here has not changed just yet. We will monitor for a trend change, but for me, as a trend follower, hard to get super excited on the banks. Utilities, here's the big hit that they took on a relative basis, testing support. And money flow, while positive, has been waning. Rising rates should have a negative impact on the utilities. That should be pretty intuitive at this point, but obviously we're always watching. And pharma stocks are oversold with bullish money flow. Here's the chart from Chaikin Analytics on the pharma ETF. You can see outperforming the market since June, oversold, bullish money flow, support at $47. One of the names that I'm highlighting today in my note to Chaikin Analytics clients is Allergan, ticker symbol AGN. But for those who are interested in playing on the ETF, this looks like a compelling entry point for XPH. Help us share the word. Get it out there if you like what you're hearing here. ChaikinAnalytics.com/PowerFeed TV for powerful, profitable stock ideas and more every day. Have a great Thursday, everyone. We'll see you here tomorrow.